Should you invest in the United States? Well, will you have to worry about factory raids? Will you have to worry about changing policies? Will you have to worry about changing input costs because of tariffs? I think there's just a lot of uncertainties right now.
But first, to the United States, where the new figures on the jobs market have raised new fears about a slowing down of the world's largest economy. Just 22,000 posts were created last month, coming way below expectations, with the unemployment rate also ticking up. This closely watched report follows Donald Trump engaging in global trade wars, which have led to a rise in the price of daily goods. Well, let's discuss this and other matters with Betsey Stevenson, a former member of President Obama's Council of Economic Advisors and now Professor of Public Policy and Economics at the University of Michigan. Professor, hello.
Hi, how are you?
I'm very well, thank you very much. Just looking at that figure of the headline figure, just 22,000 jobs are created. I'm just looking at the final, this is a jobs report of the Biden administration. The number of new jobs added to the economy accelerated to 256,000 in December 2024, up from 227,000 in November 2024. Now, how can you go from 256,000 in 1 month to, well, where are we now? September, just 22,000. What on earth can we deduce from that?
Well, it's obvious that the United States has a slowing labor market. And I think there's a lot of questions about how slow is it? Is it too slow? Are we headed into a recession? And I think a better comparison than, say, just picking a particular month like December, which was the end of the Biden administration, but we could even look pre-pandemic, even compare President Trump to President Trump in the past. And if you were looking at the couple years prior to the pandemic, we were averaging 150,000 jobs per month. So we definitely have a much slower labor market. The reason for that is there's multiple factors. So to be really economics wonky on you, this is both a labor supply issue and a labor demand. The labor supply issue is we have hung up a big, foreign workers no longer wanted sign. We are deporting lots of people. Just today, the president had his officials raid a factory and arrested 450 undocumented workers, but that also put a whole slowdown on the entire factory. And I'd like to give that example because it shows the connection between American workers and foreign-born workers, because slowing that whole factory down as they're hunting out undocumented workers is going to slow all the jobs, even the jobs by native-born workers. So you've got this factor that we're shrinking the number of workers that are available, and then we're just creating that enormous amounts of uncertainty. Should you invest in the United States? Well, will you have to worry about factory raids? Will you have to worry about changing policies? Will you have to worry about changing input costs because of tariffs? I think there's just a lot of uncertainties right now. And whenever there's uncertainty, there's one thing that makes sense for businesses. It's wait. Like the value of waiting goes up. And if everybody thinks the value of waiting has gone up, then you're going to see a slowing economy.
And Betsy, you mentioned the auto industry. Which other sectors are people like you and presumably the current president's Council of Economic Advisors, which sectors are they most concerned about?
Well, first of all, I think that this is kind of a broadish slowdown. So let me give you a little bit of numbers to think about that are big picture numbers. So if we look at August of 2025 and compare it to where we were a year ago, August of 2024, so back in that Biden administration, if we had the employment rate that we had a year ago today, we'd have 1 million more people working in the economy. So these are big numbers. And that's, we've seen it tick up in the unemployment rate, and we've also seen the participation rate tick down. So we just have fewer people overall that are working. It's primarily concentrated in the goods producing sector. Think manufacturing, construction, mining. That's where we're seeing a lot of job loss. But the reason I say, and I should also say federal government workers. So government workers, that's a very purposeful decision to try to reduce employment there. We're also seeing in the private sector a reduction in employment in scientific fields, scientific and advisory fields. That's also pretty connected to the policies of this current administration that has been reducing its funding for research and science, as well as, its appreciation for research and science. And then the broader thing, as we saw this particular month, a pretty big decline in business and professional services that was concentrated in employment hiring services. So that's a signal that we're not just seeing a slowdown today, that they expect a slowdown tomorrow. Because if today the companies are no longer hiring people to help them hire people, that tells you they're not planning to hire people next month or the month after.
Right. Well, let's see. The president, if the warning lights are flashing on the dashboard, President Trump isn't reading them the way you are. I'm just looking at a statement from his press secretary, Caroline Levitt, who says President Trump is implementing the most aggressive pro-growth agenda in our country's history. But this agenda continues to be held back by Jerome Too Late Powell's foolish refusal to admit that President Trump is right about everything. Wow. Okay, so that means there's going to be no course correction. What do you forecast if the president continues in this direction?
Well, I think, first of all, there's just something very confusing about that message. Because if the economy is strong and growing, which is what she just said, then Powell should not be cutting interest rates. He's doing exactly the right thing. If the economy is weakening under Trump's policies, if the economy is weakening due to fiscal policies implemented by the Trump administration, then the economy will need to be supported by movement in the other direction by Powell, which is cutting rates. And so there is this real confusion in that message. Does he think the economy is weak and therefore Powell should be cutting rates? Or does he think the economy is strong and therefore it doesn't need additional juicing by making borrowing costs lower?
Right. And what of the Department of Defense rebrand as the Department of War? This is following another presidential executive order. The US already spends the best part of $1 trillion. I think it's $997 billion. Do we expect more spending on defense? And might this help stimulate growth and more move the US jobs market in the right direction, as Trump would see it?
Well, I like that you ended the question on economics in the labor market because, foreign policy and defense policy is not my field.
Yes.
I will say that, though, it's a little bit saying like, great, we're going to create a bunch of jobs because we're going to have a bunch of people fighting a bunch of other people. It's kind of like saying, hey, that natural disaster that flattened all of our buildings wasn't so bad because now we get to hire people to build new buildings. That's really a false understanding of resources and employment, right? So we want to think about how rich we are as a country, and our wealth as a country allows us to have a high standard of living, and we share that wealth. And one of the ways wealth gets distributed is through jobs. But if we're fighting all the time and we're spending a lot of our resources on fighting, that's not a country with high standard of living, right? Because nobody gets out of bed in the morning and thinks, what I want to do is put my life at risk. You'd prefer to live in a world in which there was peace. And so I just don't see that as sort of boosting either economic growth when we consider that economic growth is about boosting living standards. And I don't think of that as employment as ever justifying any kind of military intervention. Military intervention should be justified for foreign policy and military reasons, not for employment reasons.
Yeah. And brief final response on this, Betsy. Listener Helen says this: will enough native-born Americans be willing to work in those factories, or are those jobs beneath them, in brackets, like fruit picker jobs here that are deemed too hard or not paid enough? What do you think?
Well, as a labor economist, I think that wages can clear markets. The question will be, whether Americans want to pay for those products, what they'll have to pay when they're paying people the wages they command in order to do those jobs.
All right. Betsey Stevenson, Professor of Public Policy and Economics at the University of Michigan, thank you very much indeed.